Hello, you Willy Wonka Wankers. Welcome back to Strongman Personal Finance. Would you fancy a pint of Newcastle and some fish and chips, matey? Welcome back to Strongman Personal Finance. Did you like that English impression? Because we're talking about British American tobacco today. Do I sound like a Willy Wonka Chocolate Factory Englishman? And did you like that intro clip of that delicious slag smoking a cigarette? Doesn't that make you want to buy this stock? I went all in after I saw that video. Anyway, welcome back to Strongman Personal Finance. We're talking about tobacco stocks. Now, in 2021, it's almost 2022, there's all these bubbles going on with EVs and green technology, and basically everybody's investing in the future, bro. And the future is coming about one day. It could happen in 20, 30, 40, 50 years. But people are paying massive amounts of money to buy stupid companies that don't even produce good cash flows or any cash flows. They're paying massive amounts of money. And they're probably going to end up down at the truck stop. I'm talking to you Tesla investors and all you freaking speculators and all your stupid EV stocks. And all the companies that people think are going away, like oil and tobacco, I think they're undervalued right now because people are discounting that how fast they're actually going to go away. They're not going to go away anytime soon, I'm going to tell you that. So let's go look at tobacco consumption before we dive into the stock. Now, cigarette consumption globally. If you look at this, in the United States, for example, there's 1,000 cigarettes smoked per person per year. This was in 2016. 1,000 cigarettes per person per year. There's like 20 million people in the United States. You go look at Russia, also has a pretty big population in the hundreds of millions. 2.295 thousand cigarettes smoked per person. China, a pretty big country, isn't it? 2,000 cigarettes smoked per person. There's like 1.3 billion people there. India, well, I guess they're not popular in India, 89 per person. Indonesia, another large country, 1,600 cigarettes smoked per person per year. So you look around the globe, and even though maybe Europe and America are becoming more liberal and amazing, and people aren't smoking cigarettes as much, there's also other parts of the world that have massive populations that are still smoking cigarettes, okay? And even in developed countries that are liberal and amazing, like the United States and Europe, they still project growth in tobacco consumption. Look at this. U.S. tobacco market size by product, 2016 to 2028. And cigarettes are still basically on top. I'm actually surprised smokeless tobacco isn't more prevalent in the United States. But you can see we're in 2021 right now. We're expecting, I guess a decent slow rate of growth. But I don't see this industry dying, okay? A lot of you clowns, it's not the future, bro. But guess what? You're wrong. So, let's go look at this company, British American Tobacco. I like to look at the products that they offer. And when I did, because I actually did a little bit of preparation for this video, I was very shocked to see what this company produces. So they have a couple different categories. They have non-combustibles, which is like vapor products, tobacco heating products, modern oral products. Now, when I was dipping, and I actually quit dip, I would go to the gas station and I would get a free sample of this Velo thing. And I had no clue that it was made by British American Tobacco. And then when I saw that, I was like, holy crap, that's pretty cool. So yeah, they're actually marketing pretty heavily, at least where I live. Man, I'm in the redneck country. Then you go down and you see Grizzly. Let me tell you what, Grizzly is the dip that I love. It is my favorite dip. If you dip tobacco, chewing tobacco where you spit, Grizzly Wintergreen is like the hottest of the hot, okay? And they also make Kodiak. Or at least I thought they did, but they're not showing that here. Kodiak's another dip brand that I like. So once I saw Grizzly, I was like, I love this company. Maybe I'm biased, but they have the dip that I like. And then during my brief stint of smoking, I actually smoked Newports for like a month, and then I never smoked really again. But you look at the products, these are all big, massive products that are all pretty familiar. Camel, American Spirit, National American Spirit, I see those everywhere. Newports, pretty big. Pall Malls, Lucky Strike. These are pretty big brands, okay? This company ain't going anywhere. And I like how they're starting to venture into, modern smoking, which is more progressive and amazing. But whatever. It's probably still going to kill you, but whatever. So, I like the company. I don't care about the financials yet, but just because Grizzly is one of their subsidiaries, I'm in love with this company. Now, let's go look at the financial statements. So what I did is I downloaded them from Morningstar. Now, I've explained it multiple times, but I've created my own model. It's not the most professional model, but it gives you a rough idea of what the stock is worth. I download everything from Morningstar, I copy and paste it into here, and then I have some percentages for myself to help me like analyze the stock, so I can see like changes or like averages in share issuance, growth in revenue, blah 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 blah. But you can also just go on Morningstar itself, and you can go to your local library and get a free subscription if you want to do it that way, which is perfectly fine. So that's what I use to analyze my stuff. Now let's look at some liquidity and financial health stuff, which is basically debt, stuff like that. Current ratio, a little low. Interesting. Usually you want a current ratio, which is your current assets divided by your current liabilities. You want it to be at least over 1, because that means you have enough cash or stuff that you can convert to cash quickly that can easily pay off short-term debts that are coming due. The quick ratio is a more stringent test of the current ratio, which that's actually pretty freaking low. But, I mean, it seems like it's been low for forever. So, maybe it's not a problem for British American Tobacco. Maybe they have a lot of turnover with their products. Financial leverage, that's just a measure of debt versus equity, or, debt versus assets. Basically, the higher the leverage, the more indebted the company is. So you want that number to be lower. And as you can see, the number's been going down. I mean, look from 2015, 2016, all the way down to now. It's not looking that bad. And then you have debt to equity ratio. That's also freaking low. So they're not really heavily in debt, at least from my, cursory, analysis. They seem to be highly profitable. You see net margins between 20, 30, 35. Free cash flow is good. Revenue growth has been pretty solid. I mean, they've had some years of revenue decline, but overall, I think their revenue will continue to grow. Maybe not crazy, but it is going to grow. Now, let's go look at our input tool, which I totally did not steal from Everything Money. But isn't this cooler than Everything Money's? I mean, come on. Do they have me, Kevin, with a clown nose and Jeremy LaFufu hanging off the ceiling like a vampiric bat that he is? So, up here I have the stunk. The BTI. BTI, it's a ticker. The ticker symbol, wait, the price is currently $34.78, and then I have all my assumptions. Now, because British American Tobacco is measured in pounds, let's double check that. Oh, wait a minute. Yeah, it's measured in pounds, so I didn't update this, but the actual financials on Morningstar are measured in pounds. Actually, let me check, because if that's not the case, okay. I was like, oh crap, if it's actually measured in dollars, and all my assumptions are completely off. No, we're good. So it's measured in pounds. So when you're on Morningstar, you need to be really careful when you're looking at the currency that the numbers are measured in, because you can get wildly different estimates if you don't adjust the numbers for the currency. So this is in pounds, and the conversion rate is $1.36, which means the dollar is weaker than the pound. So here's what the numbers we're looking at, because we need to convert it from pounds to dollars, because I live in America, and I use dollars, or Dogecoin. So, we're looking down here. And as you can see, I've already input my numbers, and look at the buy points. I mean, to get a 15% return, you could buy right now, assuming the middle assumptions are correct. And if you think the high assumptions are correct, I mean, holy crap, this stock is a freaking banger. And even the low assumptions, which it's pretty rare for the low assumptions to be aligned with a good buy point to get a 15% return, they are, okay? But I always say this, I know you clowns, oh my god, I buy the stock and then it went down, strong man. You need to do your own freaking research, okay? You need to do your own assumptions, because maybe you don't like my assumptions here. I mean, I think they're reasonable, but if you don't like them, too bad. And then you need to be willing to hold this stock for 5, 10, 15, 20 years. I don't want you to get all butthurt if the stunk goes down, and you're like, see, the stock went down, you're so stupid, for 1 quarter. Full of crap. So my assumptions, between 3 to 5% revenue growth. Now, we can even lower that. Let's say we have 1, 2, 3, which should be lower than inflation. And even then, it's still a buy, okay? But I like 3, 4, 5. It's roughly in line with inflation, and they're launching into different industries. And there's a global market for this stuff. And I'm biased because I like their products. I've dipped Grizzly for 10 years on and off, and I love it. It's amazing. So maybe you can't trust my opinion. Share change. So these clowns actually seem to be issuing shares. Because you can see here, in the last couple of years, it's been, what is it, in the millions? I don't know, it's probably in millions. Probably 2.2 billion. So it's been roughly flat, or they've been issuing shares like at a very, very, very low rate. Now, just to be, safe, I said, okay, well, maybe they'll issue shares at 0.5% every year going forward, or maybe they won't issue any shares for middle assumptions, or maybe they'll even start buying some back. Who freaking knows? I mean, if the stock's cheap, that's kind of the time to buy back the shares instead of waiting until it's freaking expensive. Like Tesla! But we don't worry about Tesla right now. Profit margin, they're actually an extremely profitable business. I mean, it doesn't matter always what the profit margin is because it's what you're paying for the earnings. But their profit margins are pretty freaking good. I mean, you go and look at their profit margins. You have, so 2017 was a fluke. I didn't even use that in my average. You have 24% in 2018, 22% in 2019, 24% in 2020, 24% in the last 12 months. And I average it out, excluding that one freaking weird year where they had 184%. And I get an average of 27% of net margin, which is pretty freaking good, okay? But, I went a little bit lower just to be conservative. But if you want to be, less conservative, you could say between 24 and 28. And that only makes it more of a buy. But, you do your own research, okay? Free cash flow is a percentage of revenue. This company's a freaking beast for free cash flow. You go look. Woo! Delicious. Man, 30, 35, 30. But it's not the future, bro. So, average of 30%. Free cash flow is a percentage of sales. PE, 8 and 12. Return, 15%. Now, if you wanted a 10% return, I don't know what to tell you clowns, okay? This is I might buy some. Now, another thing before I close this video out. Some people have gotten mad because I don't put a lot of money into the stocks that I make videos about. Well, guess what, people? I'm very consistent with my strategy. I max my tax advantage accounts and buy total world stock market index funds. And I'm going to continue to do that forever. Unless I get so rich that I can just afford to YOLO into clown stocks like Meat Spin Kevin and Jeremy I can't even say it, LaFufu, the Beefy, LaFart. But as of right now, I need to save as much money as I possibly can so I can max my tax advantage accounts. I may put a couple $100 into British Tobacco. I haven't decided yet. Maybe I'll wait till it goes down a little bit. But that's just how it is, okay? So don't get mad if I only put $500 into a stock. Yeah, that's all I'm going to do because I need the majority of my money to buy total world index funds. The only stock that I have a lot of money in is Alibaba. And I'm done buying that too. It's probably like 2% of 2 or 3% of my portfolio now. That's too much in my opinion. So anyway, that's it. I like the stock a lot. I love the products. Maybe I'm biased. I think this company isn't going anywhere anytime soon. I think if you want to avoid hype and buy a company that's actually massively profitable and produces good products that are also highly addictive. I know liberals. I know they're addictive. Then maybe you should consider British American Tobacco. Matey. Willy Wonka. Anyway, that's it. Like, subscribe, tell your friends about me. Y'all have a wonderful day. Choo!